Hey traders, Mike from CapitalHillFX here. In this lesson, we're going to be going over how you could outline and validate your support and resistance levels. So without further ado, let's jump into TradingView and take a look at this. So for those of you who have been following me for quite some time now, know I trade off of basic support and resistance levels. I'm waiting for price to come up to one of these daily horizontal levels, and I'm buying at support or selling at resistance. If we have a break and retest of market structure, perfect. I'll capitalize a bounce off of that retest, but I just want to give you a good idea of how I'm actually identifying and validating all of these support and resistance levels. So I use three pieces of criteria that helps me identify these significant structures in the market. The first is how many times have we tested this zone? The more and more that we test a zone on the charts, the more likely we are going to respect it in the future. I'm going to show you this on the charts on Euro USD on the daily time frame, and I'm outlining a majority of my zones all on the daily time frame. The daily charts gives us a very good indication of where price could potentially reject with. So we can see we do have a significant zone that price is currently trading around, and we've tested at this level multiple times, not only as support but also as resistance here. We can see we tapped here, and we're currently trading around this zone and potentially treating it as resistance, rejecting away multiple times. So we can see that we've tested away from this level multiple times, maybe over a handful of times we've tested this level. Now, if we compare this level to say maybe a level like this one, we can see that price has not tested this level as many times as we've tested this level. With this being said, I would say that this level is much more significant than this level just because we've tested this level more, right? 1, 2, 3, tried to test as support here, broke through, came back, tested a fourth time, fifth time, and this would probably be another like 6 or 7 times, right? So maybe 10 or 12 times we've actually tested this zone. When it comes to this zone, we've tested it less than a handful of times, right? 1, 2, 3, 4, maybe 5 times we've tested this zone. So that gives us a good indication that we've tested this zone nearly double the amount of times that we've tested this zone. So if we're trying to trade a bounce off of this zone, we already know right off the get that it's not as significant as this one because we've tested this zone way more than we've tested this zone. So the first thing you want to get a good idea is how many times have we tested the zone? Have we tested it once? Have we tested it twice? Have we tested it 10 times? The more times that we've tested the zone and successfully rejected away from that zone, the more likely price will respect that zone in the future. So get that in your head and make sure you're getting proper context of how many times we've tested that zone. So the next thing that I look for when validating support and resistance levels is how recently the trading took place around that zone. So for example, this exact zone, we could see that we are currently trading around this zone. And the last time we've rejected away from this zone was maybe last week or 2 weeks ago. And we could see this when we go down to the hourly time frame. I'm not going to do that just because I wanted to pick the other zones. But we could see that we clearly have been trading around this zone very recently. So considering price action has been respecting this zone very recently is much more significant than if we're trading off a zone that we haven't touched in years. Just like the zone that I outlined right here. We have not traded around this zone since the beginning of the year. The end of March is the last time that we traded around this zone. So it could be the next time that we come up to this zone, it may not be well respected because we haven't touched this zone since the beginning of the year, right? So it's not likely that price is going to bounce at this level because we don't know if price is going to bounce here because it was such a long time ago. But this zone right here, we have a very good indication that price could potentially react here because we just recently rejected off this level not too long ago. So you want to be able to trade off of the zones that price has been reacting to recently, just because you have proper context that price has been reacting to that very recently, rather than trading off of a zone that hasn't been reacted with in years. So make sure that you're trading off of the most recent zones that price has reacted with, not the ones that have traded off of a year, 2, 3 years ago, because those zones seem to be a little bit more shady than the ones that have been placing trades off of recently. So make sure the first one is how many times have we touched the zone. The second one is how recently has trading been taking place around the zone. Then the third and final piece of criteria that I monitor to outline and validate my support and resistance zones is how significant is the intent with direction in the candles around that zone. So if we look on the charts, we could use this zone as an example. We could see that every time that we've come into this zone, we've had a clear intent with direction in one direction, right? Every time we've come into this support zone, we've treated as support and had a bullish bounce towards the upside. Or if we've come up as resistance, we've actually treated as a bearish bounce, right? We haven't been consolidating around the zone or swaying through it, not showing much activity in the markets. We can see a majority of the time that a price comes to a zone, if we have an impulse move in either direction, direction, whether it's towards the upside or towards the downside, that's showing us that there's a lot of activity and an impulse of buyers or sellers around that zone. And that's exactly the setups that we want to place trades in. We don't want to be placing trades where price consolidates just like this and just goes side to side. We don't want to be placing trades in these types of markets. We want to outline the zones that have clear activity, an influx of buyers or sellers. In this case, it would be sellers, so that price could actually drive to our take profit. And we could see with this zone, we've had clear impulse moves followed whenever price tested this type of zone, which makes it a very valid zone. But if I'm outlining a zone where price has just been swaying between maybe a support and resistance zone on this daily time frame on Euro USD, we could see that we do have a zone down in here where price just sort of doesn't have clear intent with direction, right? We can see every time we test it as resistance, we're sort of just consolidating and swaying back and forth between the zone and maybe this zone down in here. We don't want to be placing trades off of these zones because they don't have clear intent with direction. And we want to place trades off of zones that have clear intent with direction so that we know there's a clear influx of sellers or buyers at that exact moment in the chart. So to wrap up the 3 pieces of criteria that you want to look for when you're outlining and validating your support and resistance zones. First, how many times have we tested this zone? The more times that we've tested the zone, the more likely that it's going to be treated as support and resistance in the future. The second one is how recently has trading taken place around this zone? The more recent that trading has taken place around the zone, the more significant that zone will be in the future. And then last is how significant is the intent with direction in the candles? You want to make sure that there's an influx of buyers or sellers around that zone and clear activity showing impulse moves in either the upside or downside before you're actually placing trades off of that zone. I hope you learned something from this lesson. This is Mike from CapitalHillFX, and I'll see you guys on the next one. Cheers.